What's up, everybody? Welcome. This is the seventh recap that we're going to do of our trades this past week. This past week was, I would say, it wasn't that good. I mean, price was just consolidating a lot. So, I mean, the opportunities weren't really there. The volume wasn't really there. Didn't really do a whole lot of returns. So in total, I made about, like, let's say 1,400 minus um withdrawal. The profits came up to about $1,000, so it wasn't that much, but did end up doing a $300 withdrawal. Now, if you haven't seen the previous series, there's a whole series, right? So this is a 13-part series where I'm going to take this till the end of the year, and we're going to see how far we can take this account to, because I believe that if you can get this account to at least like 15,000, realistically you can withdraw $1,000 a week from that sort of an account. um, so let's see this here. All right, here we go. This is what we're looking at now. So total trading was like $1,400. Withdrawal was like a $300. Now, coming down from a multi-million-dollar account, this is very, very tough because I really have to put my ego aside and have to prove to all new traders, young traders, that you can start with a smaller account. You can focus on 1 or 2% a trade, and you can create something that you can be proud of. Right now, I know a lot of people don't have 50,000, what I did with my bigger account, but this is like from a $5,000 perspective. So we're gonna jump right into it, and we're gonna go trade by trade, all the trades that took. I traded the 14th November, 15th November. I didn't really trade. 16th November I trade. 17th and 18th November I also trade. So let's take a look at this right here together. First trade was a buy on pound yen. Let's take a look at that. That was on the 14th November. Oh, okay. Yeah, this is a very simple buy. I even called this out on my Twitter, I think. But the main idea was this was around, like, pre-London, London Open. We had clean range to the left hand side, and a lot of people took this trade. We broke above the high of the previous candle, 30-minute candle, broke above the high, stops were below this current candle, and we started to rally up. Now, this trade, looking at it on the 15-minute perspective, this trade was taken on when the 15-minute candle broke the high of the previous 15-minute candle. So the stop was around 16, 17 pips, and anticipated price to continue pushing up. We had range till 164, 700. It was a 60 pip range, so very good risk reward, and ended up, like, volume really drove price up, so, and ended up making $387. Now, when I made $387 in that trade, I was like, okay, you know what? Perfect. I'm going to be, this is going to set me up for the week. So now I have also increased my lot sizes as the account balance went up. I'm going to be start trading 1.5 or 1.75 lots, no over risking, no over trading. Next trade was a buy on gold. This was on the same day after a couple of hours. Let me take a look at this over here. 14th November, and this is the buy right here. Okay. Now, what's happening at this point was that we created a support. Okay. We created a support. We created a resistance. This was actually taken on the live streams, I think. Right. The whole idea was that the 30-minute, yeah, this was taken on live streams. The 30-minute candle closed with no wick on the top. And we know whenever a candle closes with no wick on the top, there's a high probability, well, there's a 50-50 chance that price can either move up or it can move down. So what happened at this point was I lowered my lot size to 0.75 because I used the 1.5 lot before. So I waited for the candles to create a lower wick. Once a lower wick has been formed, and then once we start breaking its zone high, there's a high probability we can continue to move up. And that's exactly what I did, right? The 30-minute candle, it closed with no wick. Next candle, wick down. We waited for the wick down. Price broke the high, and we started to move up. A lot of people took profits at 1761. I decided to take profits around 13, 14 pips. This is also on my live stream from that day. You can go check it out. Awesome trade, very, very well done. Next, we had a gold buy on the 16th. Let's take a look at this right here. We had a gold buy on the 16th. 15th I took off, was really, really busy, so didn't really trade at that point. Now, this was also very special. I wouldn't say this was special. I would say this was pretty easy, because we weren't in an opportunity. Let's take a look on the 1 hour time frame here first, right? Let's take a look at the 1 hour time frame going over. Oh, this is a 4 hour. Okay, let's go over to the 1 hour time frame. One moment here. All right, here we go. So, based off of the 1 hour time frame, we had a support at the bottom. Okay, perfect, no problem. And then we also had a resistance right over here on the 1 hour time frame. So the whole idea was that okay, the 1 hour candle is pushing up. What if the next candle can break the high, right? And there's enough volume in pre-London and London Open. Can we continue up in this clean range till 1781? In this 34 pip range. So let's take a look on the 30-minute time frame. Looking at the 30-minute time frame, we can see that the 30-minute candle closed like a weak bullish candle. So whenever a candle closes a weak bullish candle, even though if that's closing above, let's say, a resistance, you still have to wait for further confirmations, right? And as we look on the 15-minute time frame at this point, looking at the 15-minute time frame, it's very clear that this is where the 30-minute candle closed. That remember that weak uh, bullish candle, the 30-minute, that this is where that 30-minute candle closed. Now, the whole idea was if the next 15-minute candle breaks this high, I'm going to be able to take a buy. But did that candle break the high? It did not break the high. It closed bearish. Now, if it closed bearish, now I had two opportunities, right? The first opportunity would have been that if the 15-minute candle breaks above the previous candle's high with volume in pre-London and London Open, we can continue pushing price up looking at the clean candles on the 1 hour time frame, right? Because that's the only time when volume really moves price. Or if this candle can break below this low, then maybe this move up would be a fake out and we can continue to push down. Fair enough? Both chances. So price broke above the high, took a buy at that point, stops for like 15, 16 pips, took profits around, 32 pips, made a cool $495 on that trade, a 1.5 lot, basically call it a day right there, right? So listen to this again. This whole explanation about this trade, listen to this again. There's something to be learned all the time. Next, we had a loss in that same session. That was the New York session, and this loss, I wasn't really I think I was confident in that trade, but the way it played, because here's the thing, right? Most of the times, whenever we have a move in pre-London and London Open, right? Most of the times that move is corrected in the New York session. Now, unfortunately, that correction came on later on. I guess we had retail sales data. I guess yeah, we had retail sales data. So the whole idea on this sell was very, very simple. Um, so if we look at this 15-minute candle, right? This 15-minute candle broke and closed below this support. This 15-minute candle also closed just below this wick here to the left-hand side as well. So now I was thinking that, okay, even though the 15-minute candle closed below, if the next 15-minute candle breaks the low, there's a very high probability we can continue to push down, right? And I waited for it to break the low. I took a sell, and I think price had some other things in mind, and we didn't really go down. And if you look on the 30-minute time frame, we just retraced back up, and it didn't really work at that point. There was nothing that we could do. Even if you look on the 1 hour time frame, the next one was your news candle. It went down later on the 1 hour time frame, but the smaller time frames, there was basically nothing. There was basically nothing that I could see to maybe like I mean, nothing. So I had to take the full loss. Sometimes you will be able to manage risk. Well, I would say most times you'll be able to manage risk, but sometimes, you'll have to take that full loss on the chin, and that's what happened right here. Took a full loss. It was a 0.5 75-cent lot, lost about like 13, 14 pips, lost about $129, no problem. Next, 17 November. This was a sell on gold. I really remember this one trade. This was an absolutely amazing trade. This was taken on the 1 hour time frame, and this was actually so crazy. So let me take a look at this right here. Bring it up. Yeah, right here. So this is the 1 hour time frame at this point. So let me remove all these zones, and then we're going to talk about this trade on the 1 hour time frame. So basically what was happening was we created a low on gold. And this was also, I think, I talked about on my Twitter as well that I'm in this sell. I really anticipated price to break below 1761, but I guess price broke below that area later on in New York session. So the whole idea was that the 1 hour candle, we created resistance. Next candle was, whatever, didn't really give us a chance. The 1 hour candle closed bearish. Now, since the next 1 hour candle closed bearish, I was like, okay, what's the probability that the one after that can continue to push down, right? And there was like got like about 30 pips at that point, 1.57 lot, made about $500. Amazing, amazing day. Now, at this point, you could argue that the stop would have been 34 pips. So let's take a look at that. So whenever you're faced with an issue where your stop seems too big, or you think the stop is going to be too big, always go through a lower time frame. So I went to the lower time frames, and I was like, okay, if I'm executing a trade based on the 1 hour time frame, will my stop loss based on the one time frame smaller than that would make sense? So I was like, okay, if I have it above the 30-minute candle, which is like 15, 16 pips, that makes perfect sense. And that's what I did. My stop loss was above the 30-minute candle, but my whole analysis was based off of the 1 hour time frame. So price went down. It's irrespective of the fact that how the 30-minute candle closing. I was playing Call of Duty at that point. I had the sell on, I was playing Call of Duty, and I was like, okay, you know what? If it comes back to my entry point, I'm going to close the whole thing. But there's volume at this point. Price made a low. We have to retest this low. There's an 80% probability we're going to retest that low. And that's exactly what happened. We came down to retest that low, right? And I think that was a very good trade, very amazing trade. Next, I did a withdrawal for about $300, and then we came on to Friday. Friday took a sell on the live stream. Let's see this sell right here, and let's see here. So this sell on the live stream was based on the same concept as the previous trade on the 1 hour, right? So basically, we made a low at this point, and price had to retrace. Actually, this looks way better on 30-minute time frame. So we made this low. No, sorry. Let's see here, 15-minute time frame. Yeah, this was so we had semi-clean candles to the left hand side. I was anticipating volume to continue pushing down. So this was the idea, was anticipating price to come down to retest low. This was also recorded on the live streams too. This was one of the best trades I signaled on the live streams that you're going to take this week because I was very confident. Okay, yeah, so this was based off of daily. Yeah, the daily candle. The daily candle was bullish at this point, and my whole idea was that the daily candle should flip bearish and we should continue pushing down. Now, it's a matter of fact that that happened later on, but that was the whole idea at that point. Now, we had to look for some sort of confirmations when that's going to happen. So we all know if you're going to have a high time frame bias, your confirmations are going to come from the lower time frames. And this is where my confirmation came from. The 15-minute time frame candle closed bullish. So as soon as the next 15-minute candle broke the low of the previous 15-minute candle, boom, my entry went in. My entry went in, price went in profits, came back to my entry point. I basically managed some risk. I closed some positions, and then I let the rest of the position run, and that position ran till about 22, 23 pips. Of course, it looks like I made $50 on this one, but let me just move over to orders and deals, and you can see right here. This was the sell at this point. We have 18. Yeah, right here. So I closed one position up over here at a $1.5 lot. So I closed 50%. So I closed 50-cent lot. And then I closed another position at $5 loss. So I closed another 50%, which 50% of 50-cent lot is 25 cents. So now I've closed total of 75 cents. Now I only have 26-cent lot running, which ran all the way down towards 22 pips, made about $57 on that, minus commissions, made about $50. So that was the whole week, right? Every trade was planned, every trade was carefully picked, and every time of volume was actually carefully identified that, okay, maybe this is where an entry would make sense, a trade would make sense, and overall we can have a profitable idea. So this week was low volume during the sessions I trade. Hopefully next week can bring us more volume. And I'm going to continue trading this account. The MyFX book link to this account is going to be up on the release date of Smart Raja Concepts. We're going to see you guys on Monday for the live streams. Take care.